Hey, this is René. Welcome back to another video on this channel. Today we'll be talking about the scalping project again because I made a posted a community question here, and most of you guys wanted to see more about the scalping strategy. So I think I will be talking about it for one more time. Also, thank you for all the comments below the last video with all the ideas what we could improve for the system and all the personal experiences. It really helps me to put out great videos here and to improve the system itself. So today I will be addressing some of the points mentioned here, and we will be talking about the spread. Are we able to put a spread filter? I will be talking about slippage and the ping. If either your VPS ping or your personal PC, does the ping influence the performance of the system? And we will be talking about backtests a little bit more, and I think this is what we are going to start with. So here you can see the settings that I think I used in the last video, and I used to set up the demo and now a live trading account. But I just realized that I only tested these settings for 2022 in the last few videos. So what I did now is I took both of these symbols like Euro, US dollar and US dollar, Japanese yen, and tested them for a little bit longer period. Now from 2020 up to the current day, which is 2022 October. So the result, I already prepared the result here for you, and you can see, like, if you have a look at this still looks kind of good, but if we have a closer look, we will realize that all the performance is mainly coming from the year 2022, which starts somewhere here. So this is kind of bad news for us, because it means that before 2022, these settings would have performed really poorly in the US dollar Japanese yen market. So we could search for possible reasons for this, but I think we just have to accept it for now and say that in this period, like the last 2 years and not the current year, there are more trades that hit the stop loss, and this is like the big risk. This was like the information I needed to have a look again on the settings, and I did some or I will do some more optimization for these settings. I think a possible idea would be to increase like the trailing stop loss trigger points, especially in US dollar Japanese yen, because in this market we have higher trading costs due to the higher spread and the a little bit larger commission because we have higher lot size here. So this would be something to look at. So I just wanted to give you like the information that maybe if you want to use this program, you should also have a look at the last years and maybe do some more testing and optimize the settings. And please do not think that this system has to win like always. So you can do your own testing in the strategy tester. I think I showed this before, and I also made a separate video for this. If you do not have enough data to backtest, you should think about maybe changing your broker. You can just open a demo account, for example, with another broker. I use IC Markets because they have a lot of data and have good trading experiences with this broker. So speaking about live trading, you probably saw the short video that I posted on YouTube where I said that I opened a live trading account to now check the performance of this strategy in like a real life scenario. So this is what we see here. This is a really small account, just 200 euro, because I just wanted to test the strategy. Because, I mean, this is what I would always recommend you. Please do not take a lot of money and trade a strategy that you never traded live before, but because it might look really different in the live trading than it looked in the strategy tester. So I started this strategy I think 2 or 3 days ago in this live trading account, and we already saw 4 trades here. So let's talk about these trades real quick. So we can see that we made these 3 trades in Euro US dollar. They were the first trades, and what we see here in these trades is really important. So we will have to really go into detail here. So what we see, I want to have especially a look at the stop loss column here and this second price column, because the second price column is the exit price. And when the first trades came in, I was like really disappointed, because you can see here For the first trade, for example, the SL, the stop loss was lying at 0.98311 and the exit price was at 0.98329. So you can see there's a difference of, I think it's 18 points if I'm not miscalculating. And these 18 points is what we call slippage. So the problem is that you might have a stop loss price somewhere in the market, but the stop loss price is not guaranteed. The stop loss price just means if it is touched by the market, by the symbol price, then the stop loss will be turned into a market order and then it will be executed at the next possible situation or possible opportunity pretty much. This means that if the price, you can go along, for example, and just observe the price, maybe on Monday or any day when the market is open, and you will see that the price does not move tick by tick. So it will not move like 407, 408, 409, 407, 409, 407, 408, 409, 408, 409, 410. It will not move like this, not point by point. But it might happen that we will see something like 0.97407, and then it might jump to 410, it might jump to 412, it might jump to 409 again. So it always depends on how much liquidity there is in the market and where like some bid and ask levels, some big levels are. So it is not point by point. And this is like, for example, if the price jumps over your stop loss level, or if the stop loss is not handled fast enough, you might get what we call slippage. And then you have a execution price for your stop loss order, which is not as good as you planned it. So you can see here in this case, the profit was a lot lower, even in this case, even negative than it should have been if we would get this stop loss execution like perfectly. And we will talk, I will talk later on in this video what you can do about this problem if you can fix this. But first of all, let's have a look at some more trades. So this was the first trade on this account. So I was really shocked a little bit. I thought like if we get this much slippage with every trade, then there's no way this can ever be profitable. Because if you would take this and multiply it with like 100 or 200 trades in a year, no way this strategy would be profitable. But luckily there were some more trades. So the second trade, it again had a little bit slippage, but in this case it was only 6 points, not like 18. And this is what I tried to explain. You cannot really like, you never know if you receive slippage and how big it will be. It really depends on the market movement. And there's no way you can influence the markets, or at least not in our position. And then we had the third trade, which was again a sell trade in the euro-US dollar. And here you can see the SL price was 851, like the last 3 digits. And the execution price was exactly 851. So in this case, we did not have any slippage and we were executed at the stop loss price perfectly. So you can see the first trade had a really big negative slippage, second one had a small negative slippage, third one hit the stop loss perfectly, and then there was this trade in the US dollar Japanese yen. And this is like really interesting now, because you can see here this was a buy trade, and this is really important, and the stop loss was at 145.129. And this is a buy trade, never forget this, because the exit price was at 145. So we had positive slippage. So this is like a really good sign, because I mean, we had a really big negative slippage for the first trade, and I was kind of depressed there because I thought, okay, no way this strategy can ever be profitable if we get such a big negative slippage on average. But then this last trade really gave me hope, because as you can see here, And this is really what you should look for if you're searching for a broker. Your broker should have a fair order execution. I mean, negative slippage is not like unfair, it's just how the market goes. But your broker should also give you like the opposite. If the stop loss is touched, for example, I mean, for example, a buy trade is opened here, the stop loss is here. Then the stop loss can be touched by the price, but immediately the price comes back up. And if the price comes back up before the stop loss order is executed, you should receive this positive slippage. And this is something you should look for if you're searching for a broker. It should be just fair. I mean, you can receive negative slippage, but he should also give you the positive slippage if it is there. And you can see here, this positive slippage, this was actually a lot of positive slippage, because this was not only like 1 or 2 points, this was 29, 24, I think 16 points. So this was nearly as good as the bad slippage was for the first trade. So after all, we can say that there is definitely a lot of slippage in live trading, and it is far more than we see in the tester. The tester also simulates the slippage, as I saw this, but usually in the tester it's like 2 or 3 points, whatever. It's not really realistic. And in the live trading, it is realistic, but you can see we have positive and negative slippage. So in the long run, we would have to compare, like on average, how big is the slippage that we get. And until now, we didn't see any big news events, because there we will get a lot of slippage. I'm pretty sure about this. So this is something we will have to look for. But yeah, I mean, I will not make a video every 2 or 3 days about this system now. This will be the last video, I think, for a while. And then after 2 or 3 weeks or a month or so, I will give you another update on this strategy, and we will see how big the slippage like really is, and what can we do to improve the system to like reduce the slippage. And this is something I will be talking about now. But first of all, make sure to subscribe if you do not want to miss out like more updates about the system and a lot of other strategies that I will discuss on this channel. Also, like and comment if you want to subscribe, support the channel. It really helps and it makes me happy. So let's talk about some of the points that I wrote down here that I want to talk about. So a lot of people talked about the spread, and the spread. So until now we talked about the slippage, but now I want to talk about the spread. The spread is the difference between the buy and the bid and the ask price. For example, if we see in US dollar, Japanese yen the current prices, you can see there's a big gap between these two prices, like sell and buy. And this is what we call the spread. And some people mentioned we could add a spread filter for our strategy. And this is something that is not as easy as it sounds, because we cannot really, since we're working with stop orders here, we cannot really influence the moment when this stop order is triggered, right? So, for example, if you have this spread, it is always floating. Like every second, every millisecond, the gap between the ask, the buying, and the bid, the selling price, it can change. It can be bigger, it can be smaller. So this is like the big problem, because if the price is close to your to your buy stop entry order, and you want to like monitor the spread, this is nearly impossible, because it can change in a second. It can change 3 times, for example, and you are not able to like delete the order and place it again and delete it and place it again 3 or 4 times in a second, because this is not like the broker will not execute it as far as this. And a lot of brokers always give you like send you a message like you cannot have so many trading operations. So this is not really how a spread filter works. And also if like the price just hits your level, your entry level in this second or split second, this is the price that you have to take. So there's no time in between the event when you hit when the price hits your stop order for the entry and the event when it is executed. So at this point, as soon as the price hits your order, it will be executed on the broker of the server, and there's nothing you can do about it. So there's no way to say that, for example, oh no, the spread is too big, I do not want to get this order to be executed. So the only thing that you could do, is the only possibility to have a spread filter is, for example, to have a time filter. And this is something to be considered, because as you can see here, for example, the spread is really big in US dollar Japanese yen. And this is because this is the spread that was relevant here at yesterday evening or yesterday night, when the market stopped moving, because today it is Saturday. So in the night, the spread for your currency pairs is usually increasing due to low trading volume. So a possible way of like removing or reducing the negative impact of the spread would be to add a time filter. So you could say, I want to trade this strategy as it is, but I do not want to trade like from 10 o'clock in the evening until 6 o'clock in the morning the next day, or until 1 or 2 o'clock in the morning of the next day, because that's like the time when the spread usually becomes smaller again. So this is something you can do, like adding a time filter. And you can say, in this time period, for example, I do not want to open new positions and I cancel all the open pending orders. So this is something you can do, but you cannot really, like in a normal setup, you cannot really influence the spread or add a working spread filter, because this is just not how it works. The spread is changing like too fast, and you cannot really modify your buy stop orders or prevent them from being executed if the spread is too high. So let's talk about what we talked about before, like the slippage, the points that you pay pretty much if you, for example, get a worse entry price or a worse exit price. Let's talk about, I mean, we can get slippage for the buy stop order, the moment when we enter the position, or for the stop loss order, the moment when we exit the position. And this is there's a difference, because for the entry order we could have something like a slippage filter. So let's say, for example, right now we are working with buy stop and sell stop orders. So these are orders that are laying in the market and they're waiting for their execution. And for example, here we have this like buy stop order, and you can see it is laying somewhere here at this level, and as soon as the price reaches this level, this buy stop order will become a buy market order. So it will be executed at the next possible price. And we could say, for example, that instead of a buy stop order, we want to place a buy limit order as soon as the price reaches this level or is shortly above this level. This would be possible, like technically from the programming part, but you will have to think like one step further. What is the downside of this technique? I mean, if you wait until this price is reached and then want to place a buy limit order, this means that the order is only executed if the price stays at this level or drops below the level. And if you saw already how the price moves, and this is what I wanted to explain before, the price does not move point by point. So if the price just jumps like 1 or 2 points above this buy stop order, it doesn't really help if you place a buy limit here, because if the price just goes on moving upwards, this order will never be executed. So this is like the big problem, why you cannot add a working slippage filter, because it just doesn't work. I mean, there are only 2 choices you can make if you want to trade at a specific level, and if you want to trade the breakout. You can either accept the slippage, or you say, if you want to have this price like definitely, then you will have to add a limit order, or you can work with market orders and like observe the price if it comes back. But in this case, this is the second option. You risk that you do not take the trade at all. Because if the price just jumps over the level and never comes back, you cannot make the trade. Because you can only trade the prices that are available. And this is why there's no such thing as a working slippage filter. Because there are just these two options. You either open with slippage, or you risk slippage, or you risk not taking the trade at all. And this is the big problem. But yeah, this is, I mean, for the position opening. So I like to work with stop orders for the position opening, because then I can be sure at least that the order will be executed, even if I have slippage. But I think this is the best way to like get really close to the testing. Yeah. So let's talk about the stop loss order now. This is a little bit a different scenario, because in this case we are using this stop loss order to close a currently open position. And here it is like really similar, but still a little bit different. I mean, the idea of a stop loss order is that you want to close the position as soon as the price reaches this level. So you can say, for example, we opened a buy stop order somewhere here, and then if the price comes down to this stop loss level, then again, there is you cannot prevent slippage, because if the price just jumps over your stop loss level, this is what we call slippage. You will get a worse execution price than you planned. Then you have to accept the slippage, because otherwise it doesn't make sense at all. Because if the price moves here, or jumps here, you cannot wait for it to come back to your stop loss level, because this is an incredible risk that you do not want to take. Because if the price jumps over your stop loss level, and if it continues to fall down, it might never come back. Do you understand? So it doesn't have to come back to your stop loss level. And this is why you have to accept the slippage. There is no such thing as like waiting for it to come back to your stop loss level. Please do not do this. It will not make you happy. So this is why you have to accept the slippage for the stop loss. For the entry, you can always decide, do I want to make the trade with a slippage, or do I want to wait for it to come back? But for the stop loss, you do not really have this option, because if the price falls below your stop loss level, you do not want to wait for it to come back, because this doesn't have to happen. The price can just fall down for 1 or 2 years, and you will have a really big loss. It might destroy your account. So this is this is the problem with slippage, and you cannot really like. There's no good fix for this. Also, because some of you guys, some people are always asking is, can I improve like the execution quality of my orders, or can I reduce slippage if I have a really low ping? So you can see the ping in the lower right corner. You can see right now, for example, it takes around 100 milliseconds for my orders to reach the server of the broker. And this can depend from VPS to VPS, or from broker server, from broker to broker. This is it also depends on your internet connection speed, I think. But is it really important? And this is the question that I want to answer now. And you might be surprised, but for the system that we are using here, it is absolutely, it absolutely does not matter at all. And I will, like somewhere on the left or on the right side here, I can include a transcript or a video screenshot, pretty much, of a conversation that I had with the IC Market support, because they are asked about this specific question. And this is something that I want to recommend to you. If you have a question about trading, ask the support of your broker. This is what they do. This is their job. So if you have any question, if you feel insecure about anything, just ask them. It's absolutely okay. As you can see here, they gave me a really friendly answer. It was a nice conversation, and I'm pretty sure now how this everything works. So what he said basically is that as soon as you place a order, for example, a buy stop for the entry, a sell stop, or a stop loss or take profit order, as soon as you place it and as soon as it is accepted, it is from this point on laying on the server of the broker. So this is your PC, this is the server of the broker. And all the orders that are laying at the server of the broker, they are not affected by the ping at all. Because in this case, you do not have to make the connection from your PC to the broker server again to do something. The orders that are laying at the broker server, they are executed in their system. So it does not matter at all what your ping is. As soon as your strategy is fast enough pretty much to update the stop loss on the server of the broker, it is fine. You do not need a ping like 10 milliseconds. This is pretty much just a argument that VPS provider want to tell you to buy their overpriced VPS. But in most cases, it doesn't really matter. For example, for a strategy like this, it does not matter what the ping is. It might only matter, whoops, connection error. It might only matter if you're working with market orders, for example. Because in this case, like the connection from your PC to the broker PC really matters, because the market order has to be transferred from your system to the broker server. But yeah, if you're working with stop orders for the entry and the exit, it does not matter, because as soon as these orders are sent, they will be from this point on processed on the server of the broker. So yeah, this is something about slippage. So the ping doesn't really matter here in this system. So yeah, I think this is all I wanted to tell you about this system right now. And until now, I think I will work on the settings a little bit more. I think I will increase the trigger points for the trailing stop for US dollar Japanese yen, at least, because there we have higher trading costs. And then I will just monitor the scalping strategy for a while and give you a feedback in a week or 2 or 3 or a month. And then we will talk about like actual live trading results. And yeah, then we will be able to evaluate this strategy better. But I also wanted to make sure that you yeah, do your own testing, please, and do not only test in a short period like a half year. You should also test for a longer period to see if this might work, or if it is just a lucky punch pretty much in the last few months. So yeah, I'm still using this strategy or monitoring this strategy in this demo account, but it is pretty similar to the live trading, I think. We can see a little bit more slippage, I think, in the live trading, but yeah. Still, we saw here, for example, here was sometimes the demo account has more slippage, sometimes the live trading has more slippage. I think I need more data to evaluate this, but yeah, I will still monitor it on both systems pretty much, and then I will give you a feedback in some more time. So I think now we can focus on other strategies again and on more programming. So let me know in the comments what you want to see next on the channel. I think we should have a look at another MQL5 indicator or expert advisor, and then try to program it and make some backtesting maybe. So let me know what you think in the comments. Anyways, thanks for watching. Again, you can use the scalping strategy if you like. Just check out the video where I wrote this program. You can get the code there and do your own testing and trading. So thanks for watching. Have a great time. Bye bye.